This is an Uncovered Japan Company research report on Kotobukiya, ticker 7809. Kotobukiya is a Japanese hobby maker best known for creating the bishōjo plastic model kit category. The question is whether a genuine own IP franchise, direct fan retail, and a low starting valuation outweigh a recent earnings plateau and unresolved overseas execution. At roughly 9.2 times forward earnings and 1.33 times book, Kotobukiya trades near 5-year lows. The valuation is important, but it is not the starting point. First, we need to understand what the company makes, why it has a real niche, and where the economics can improve or disappoint. Kotobukiya designs character-based plastic kits, finished figures, and related hobby products. Its core distinction is own intellectual property. A character can move from a buildable kit to a figure, a collectible, a store event, or an online release. That gives the company a longer revenue tail than a one-off licensed product, while avoiding license costs on its own franchises. The report's central business claim is that Kotobukiya is a category creator, not a commodity toy maker. Its flagship series, including Framearms Girl and Megami Device, have built a long-lived enthusiast community. The counterpoint is equally important. The company depends on continuing creative renewal. If established franchises lose momentum before newer lines gain traction, the same flywheel can slow. The channel mix is changing. Directly run stores and e-commerce now account for about 41% of sales, up sharply over 5 years. That can mean better gross margin and direct feedback from fans. Kotobukiya also operates official merchandise shops for major VTuber brands. But wholesale remains large, and customer concentration is a risk that should remain visible alongside the direct retail opportunity. Financially, Kotobukiya had a powerful boom from fiscal 2021 through fiscal 2023. Revenue nearly doubled, then settled around 16.5 billion yen in fiscal 2024 and fiscal 2025. Operating profit also normalized as FX, tariffs, and the changed sales mix pressured margins. The key distinction is plateau versus broken model. The report sees a sturdier balance sheet and a still profitable core, but the recovery needs evidence. The report identifies overseas execution as the swing factor for the next phase. Kotobukiya has long aimed to expand abroad, but its overseas sales mix has stayed well below larger peers. Consolidating its US and China subsidiaries, building direct US e-commerce, and strengthening local community activity could help. At the same time, China-centered manufacturing exposes the business to tariffs, FX, and supply chain pressures. The author's base case points to roughly 21.4 billion yen of revenue by fiscal 2029. That is not an extreme projection. It assumes a mid-single-digit growth path from the plateau, helped by own IP releases, direct channels, and better overseas execution. Whether the overseas mix rises meaningfully is more important than the exact point estimate, because it determines whether the business merely stabilizes or returns to a credible growth narrative. On valuation, the current forward price-to-earnings multiple is about 9.2 times, below the 5-year average of 15.6 times, and even below the earlier trough. The report's interpretation is that the market is pricing a permanent plateau. That may prove justified if tariffs, overseas execution, and franchise renewal all disappoint. But it also means improvement does not need to be spectacular for the valuation debate to change. Against toy and hobby peers, Kotobukiya is the clear low multiple outlier in the report. Its operating margin is broadly close to the group average, yet its price-to-earnings and price-to-book multiples carry a material discount. Small cap liquidity, the TSE standard listing, the recent quarterly loss, and overseas uncertainty all explain part of that gap. The open question is whether the discount has already gone further than the fundamental risks require. The scenario analysis is deliberately wide. The report's fiscal 2029 bear, base, and bull cases span from 1,200 to 4,500 yen, with a 2,400 yen base case. Those are the author's assumptions, not a forecast or a recommendation. What matters is the structure. Tariffs, overseas execution, new IP traction, and margin recovery drive the outcome. Investors should update the thesis as those variables become observable. Kotobukiya combines a genuine category-creating IP franchise, growing direct fan channels, and a balance sheet that gives it time. The risks are equally concrete. A small and illiquid equity, China-linked manufacturing exposure, a slow overseas mix, and the need to renew its product portfolio. At 9 times forward earnings, the market is skeptical. Whether that skepticism is excessive depends on the results now arriving, not on a slogan. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.